Monday, October 30th. One more day in October tomorrow. This is Market Analysis, Stan Ehrlich, and you know I've been looking for the October lows. Now, on Thursday of last week, and you know I also start out with the stock market indexes, typically the S&P 500, one form or another. The Spider and the E-mini, and this is the Christmas E-mini, got oversold on Thursday, making new lows to move down for the last couple of months. On Friday, got a little bit more oversold, and from different chart perspectives, I'll show you an area of support that got back down into. And now we have a decent little rally this morning, not great, up about 3 points almost. The DIA is up almost 4, and the Qs are up almost 2. So everything is up a little bit. Nothing got below Friday's lows. And they're, for the most part, around where they opened or higher than where they opened. So things are looking okay, but I'm not particularly that confident that Friday was it. The October lows, October 27th. I don't have anywhere near enough technical evidence yet to say that that has been the case. Firstly, I'd like to close above Friday's highs to begin with. I'd love to have at any point here in the next few days a bullish engulfing. Then I will get a green buy signal like we did on October 6th that I thought very much so was the October low at that time. It rallied nicely the next day and the day after and the day after, but we had a bearish engulfing that managed to kill the rally in area of resistance and all the way down to what we have last week. Here we go again. So we have to close above recent rally highs. We have to maintain those levels approximately without any significant downside corrections or new lows of any degree to speak of, and just basically keep going. That's going to cause me to scream bloody murder. It was October 27th, but I can't say that so far today. Next chart. We have the Spider, and basically everything is the same except today we're not oversold. It was Thursday and Friday of last week, and here's that area of support in that blue zone. We dipped a little bit below it, but didn't close below the bottom of the zone on Friday. And up we go around where it opened at the moment. Again, close to 3 points higher, not quite at the moment. Now, the next chart is the 1 minute data on the Spider, and it's looking sideways for most of this morning, and this is around 10:15 California time at the moment. And after a higher opening, a little bit of a rally that's slightly higher than last Friday, it settled back some, but didn't do any damage, and then it's going sideways. So what we need is to get up to 414.30 approximately and stay there and go up even more. If we get above 414.30, we probably are going to attack the high of today, and that'll be good because it'll be getting late in the day, and it would probably stay at 415 or maybe even higher. I'd like to see that happen. Again, that's not necessarily enough to claim Friday was the October lows, but I'm very suspicious. Next chart. This is the QQQ, which got oversold on Thursday and Friday and rallied a little on Friday and is rallying a little bit more today. Today is actually higher than Friday's high and a little tiny bit higher than Thursday's high. Good. It'll be a new high close for 2 days in a row. Friday was a little higher and today again, but we'll see. We have significant resistance right smack at today's high where it stopped. So it's got to get above that and close above that and continue to rally more. And that would be, let's say, 351 plus. Next. The NASDAQ futures also have this resistance area or resistance line, trend line, that it's bumped against kind of on Friday and dropping below it 100% on Thursday. But today's high, although a little bit of progress is still on that line, we got to get above today's high, stay above today's high, and follow through. And I would hope that that would happen very quickly this week. Next. Now, the DIA has its lowest low and lowest close on Friday. And today it's been able to pop up and actually is about high and last right now, up on the day 4 points almost. So everything's coming up a little momentarily. Good. We'll see how these things follow through. I'm kind of liking what I'm seeing. I'm not super confident about saying that Friday was the low of the month of October, which again, I remind you, in the last 30 years, it's only failed to be in October 3 times. So we have a 90% history of having a significant buying opportunity in October. There's no guarantees. It's just got a great track record. Next. Russell 2000 is at and did make a new low for 3 years on Thursday, Friday, and is trying to recover today, but is only up a very small 21 ticks. It'll come around if everything else does, and it'll have an incredibly profound, major, long-term, huge, I don't know if I can remember the last time I saw something quite this big, support area at, of course, the price levels around the lows of last week. We'll see how this pans out. It's a huge, major buying opportunity long-term at these levels if we do start to head north. Next. Okay, so I'm going to go now to your October low chart, which I've been showing people for the last 2 months to 3 months, somewhere in there. I had pinpointed October 16-ish for the date of my bottom of October and about 406 to 7.5. You know, Friday, the low of the day was 409.21. If Friday was that low for the month of October, I'm inside my circle, but the timing wasn't very good. Now, the price level wasn't off too much at this point. I just got to start heading north. Let's see it follow through to the upside. And let's go to futures. So, one more peek at the E-mini, major support area, needs to go up some more. I'll mention at this particular point that we did have for the E-mini continuation contract a 50% retracement from the October 13th low of last year, which was an unbelievable combination of bullish situations, blatantly obvious to a technician, and all of the signals that I would ever want and could hope for, and formations. It was just great. I won't see that again, maybe never again. So, so far so good. Next is the NASDAQ. Again, we dropped out of that downward sliding wedge in the bearish direction. It needs to correct that immediately and close above today's high, ASAP. Okay, interest rate futures, bonds. We had a bullish engulfing ER buy signal at the beginning of last week on the 23rd, Monday. We came down to the ER3 buy levels 2 days later, closing with a very small loss on Wednesday. Turned to be a profitable trade on Thursday, lost a little profit on Friday, and is losing a little bit more and still slightly profitable at the moment. Bonds should, if I'm right about stock market indexes, be at minimum stable and probably start to rally above 110.19 ASAP this week. 10-year notes, same commentary. We did get a buy signal on Monday. We came close to getting stopped out on Thursday of last week, but did not. And we are up on Friday a tiny bit, but down a little bit this morning with a, pretty much break even, maybe a tiny profit on ER3 trades. Remember, ER1 always gets long when the vertical bar or candlestick turns green or short if it turns red. Next chart, crude oil dropped back to support here again. Now, this is the 5th day in a row that we've been down into the red zone here, this support area. And frankly, it has to hold here. What happens if it does? Fine, we're going to go back up and probably get up to 90 and then push into new high ground. The trend, all these lows ever since May, have been essentially higher and then higher and higher and higher and higher. So far, so good. Defining a long-term bull trend, sort of. And the highs have been higher also. That basically defines a bull trend, period. So the odds are good that it's going to hold and start to rally. If it doesn't, and we close below last week's lows, kind of depending upon how it does it, that could be pretty bearish. If it slam dunks and a lot below last week's lows and breaks below the lows of early October, that's going to be potentially a brand new substantial bearish indication signal. We'll see what happens here. Crude oil is kind of an important spot. Natural gas. We were short on an outside down day, bearish engulfing ER sell signal because of October 11th price action. It never was a losing trade for ER1 and just dropped like a rock for 2 days to get started and dropped for another few days. And we had 7 days in a row of profitable trade until it started to come back up, stopped us out Thursday of last week. And now we're dropping again a bit. It was a great trade and no qualms about that. Yes, we could have changed if we wanted, but you're not supposed to. The inputs to speed up or slow down the smart trailing stop yellow line, which is not a percentage trailing or a dollar trailing amount, which is typical with trading platforms. It is a combination of a variety of other features, some of which is the relative strength index at the bottom here. And that was, I learned this from Wells Wilder himself. So next chart, heating oil. Top formation could be developing. I've alluded to that for a couple of weeks now at least, ever since this rally high started to peter out and slip off. So there might be, a little premature for me to say, a 1 single shoulder, 2 second shoulder head of the formation, bumpity bump, and then the first shoulder was a couple of weeks ago. We should come down close to the neckline, not below it, or it may reestablish a slightly downward slanted new neckline sometimes. But there's supposed to be a second shoulder, and it's supposed to be kind of this week. So a rally around where it was before or a little lower. And then if it starts to come down, I'll be screaming double shoulder, head and shoulder top. Next chart. Gold. Very overbought, staying that way, keeps going straight up. Look at that. We got a green ER buy signal for ER1 trades right smack dab on the low day, October 6th. Period. This has been pretty much straight up. It's just a great signal and great trade so far. We bought the bottom of that break. We sold the top of that rally. There are a lot of others. I got to go to the next chart. Silver. Okay. We bought the bottom of the break here on March 10th. We sold the top of the bull move, April 14th, and another sell signal at almost exact same prices for a double top, May 5th, with a complementary sell signal a couple of days later and went crashingly down the next day. Bought the bottom of the break, sold the top of the rally, bought almost the bottom of the break, sold almost the top of the rally, and a bad signal last week. On Thursday, we had a bearish engulfing. All looks legit. It just didn't work. So we had a small, quick 1 day, 1.5 day loss. We're flat. Now what? Well, we're still in an area of resistance. I had a sell signal, and these can sometimes cluster and be 2 or even 3 in a top or bottom formation developing. So I am looking for still this major resistance area to stop the rally and maybe turn it back down again. Next chart. Wow. We got the bottom of platinum on October 6th. This is a screaming new high, going up probably too fast, too much. And look at RSI. It's almost at my custom overbought levels. So I think it's coming to a top soon this week. Maybe it'll get up as high as the 968 to 74, 974 gap closure area, this red zone. I would certainly be looking for that if it happens very quickly and we're pretty darn overbought at the time, which we probably will be. I would be screaming that it's highly likely to be turning back down. But the closer you get and the faster you get there, that's just what I love for turning points. Okay, we caught the top of that one. We got the bottom of that one. We got the bottom of that one in platinum. Some great signals in precious metals this year. High-grade copper, major resistance, coming close to overbought, not quite. You don't have to get overbought to turn back down. This trend is down. We have the lower lows. We have the lower highs ever since the beginning of the year in January. And some great, there's the rally high and a red sell signal. Perfect. So I think copper's maybe today hitting a resistance level and in the process of starting to head back down to new lows for the trend for the year. Next chart. Soybeans. We have a buy signal on the bottom, October 12th. We are still long, not particularly that profitable. I like what I see, but I wish it would make a new high real damn soon. Otherwise, we're in jeopardy of getting stopped out. I'm bullish. Buy signal was at the very bottom, but it didn't rally all that much that quickly. Next chart. And beans, and beans could be starting a very long-term bear move. I can't tell yet. This is a huge trading range that we have made new highs a few months ago out of on the way up, but it didn't hold. And now we came way back into support area and actually broke a little bit below it only a couple of weeks ago when we got that buy signal. So beans are trying to decide whether the bull trend is still intact or whether this is a gigantic top long term. Next chart. Bean oil, we sold the top of the market. What can I say? Sell signal on the top of a double top. Instead of both of these being red for like silver, we only got a sell signal on the second one, which is the better one to get one sell signal on. And we are still short soybean oil. It has come down from a short at approximately 63.30 to our current tick, which would be 52.73. Can't help it. I got to stay bearish. But my downside objective on the head and shoulder top formation, and there's the first shoulder, there's the double top head, and here's the last shoulder high. There's the neckline. This is the downside breakout, which was on a closing basis September 28th. A test of the neckline, rallying back up to it with a bullish engulfing that did not work right around October 2nd and 3rd. And then kaboom, down. That bullish engulfing did work. It produced the rally back up toward, not quite up to, don't have to reach it, neckline. And then, hey, new lows again. So I think we're going to get to 50 and maybe even lower. And this week, next chart, soybean meal could be developing a long-term top. Resistance did stop it on Friday. It closed on Friday pretty decently, but this morning's unchanged opening and kaboom, we're lower than Friday's lows and now coming down to this little resistance area, but we're not quite below the low of the resistance area, which what you need in order to break down, and then we would go down probably to 360, 370, 375, 370, something like that. Taking a couple of weeks to do it. And I think that's what's about to happen. Next. Corn, I think, is going to go by the wayside or by take the route of wheat. And I've showed you this many times, and we've almost got a new low close for weeks. Wheat dropped below support, rallied to resistance, made new lows, bounced, made new lows, bounced, and here we are, almost a new low close for 2 weeks or so. Next, cattle. Okay, we had a sell signal on top. We had a sell signal on top. We had a sell signal on top. We had a sell signal very close to the high. We had a sell signal very close to the high. Unfortunately, throughout all those 5 good in a row sell signals, we only had one buy signal that worked great. This sell signal didn't work. I see a little red one in here, and that one did work, but it wasn't the highest high, so it didn't mention it, but it worked. That's a fantastic buy back there. What's going to happen with cattle? Well, we're popping back up to close the small gap I talked about for the last few days, and it almost did it. It actually looks like it closed a part of the gap, which is not good enough, and should still be strong enough to close the gap completely, which is going to be up to a price of the low on October 20th, which was 184.425. So a little more strength and then down. Next chart, hogs. Kind of the same commentary, not for the same reasons. In a resistance area, getting fairly close to overbought, not quite. May have another day or two worth of strength, and then I think it's going to turn down. This market has, since July, failed to make higher highs, even though it tried valiantly, but it stopped in a resistance area pretty perfectly, and then made new lows for months and months. So the buy signal is working great that we got last week. That's not the issue. The longer term issue is what's going to happen. And it might come up a little more, but I think it's going to make new lows within 1, maybe 2 weeks. Next chart, OJ reached the resistance line. Now, this is a bullish resistance line. It's the top of an upward slanting channel. And we say bullish because it trends up, and resistance because the market is trading under the line. And when it goes up and touches it, it stops. So it's resistance, but it goes up and up and up. A bullish support line is very typical and normal to talk about, and we have it at the bottom of an upward slanting channel. But we're not there. We're overbought, and we're at the resistance line. It should stop here and turn down some. Next, cocoa. Made new highs on a closing basis last Thursday, got follow through on the upside on Friday. But we're still overbought now for several days, and very overbought. We reached levels of mid-80s, upper mid-80s. And every time we've done that recently, we've had some sort of downside correction relatively soon. And I think it could have started today. If we make a new low today, which is almost super close to the low of Friday, which was Friday 38.08, and today's low so far is 38.10. If you get below 38.08, you'll have a red bearish engulfing like we did on August 7th. The next day after that was a surprisingly huge down day. Not surprising it was down, surprising that it was a big one. But that's what happens sometimes. It was great. So I'm looking for a top. We got all the right conditions. I'm just lacking that slight new lows to get my actual signal, which was also done on coffee last week. We had a great sell signal, kind of at the top of the resistance area, hair above, but it basically couldn't stay above the resistance. And kaboom, now a new low, and a new low close likely today since last Wednesday's bearish engulfing signal, which is working great. And sugar the sweet, bearish engulfing today, outside down day, but we weren't overbought. So this is going to turn itself into a little bit of a double top, I think. It's not particularly huge, but the way you measure how far down it could go is what is the average price of the double top down to the lowest low in the middle? And that's your depth of the formation. Now, I'm not going to give you the exact number. I'm just going to eyeball this real quickly and tell you that it's probably down to something in the ballpark of June lows, 22 and change. Next chart, cotton, the rag, new low close probably for the last 3 days, Wednesday, Thursday, and Friday of last week. During today and the close, I kind of expect. And it's going to make another new low. That'll be a new low since July. Now, it's not a real big mover. This has been going sideways for quite a long time, for a full year. And I kind of expect that to continue until we get a whopping major breakout up or down. So I'm looking for something in the ballpark of 76 within a couple of weeks. Next chart, back to the E-mini, which is holding pretty well. In fact, ladies and gentlemen, we've got ourselves a little bit of a move here. Let's look at the indexes real quick again. We have a new high for the DIA 1-minute chart That's doing great. Let's go change to the, okay, good. Oh, wow. The spider 1 minute chart turned red. Now I did this for you guys several days ago while it was red before it started to come down. Literally go back to, I forgot what the date was, 5, 6, 7 days ago. And it was a spider, I believe, I was referencing as well. We have a code that turns the 1 minute bars either green or red if the strength or weakness is enough, period. That indicates a potential scalp. When it's red, within a minute or 2 or 3, prices usually start to break down, which this one did. Now, I don't know if that's what we're over or not. I can't tell. But using very, very tight trailing stop technique, you should have been able to capture some sort of a profit on that swing down, which only took about 5 minutes or so. Now, that's that, the end of that. I like what I see. We've got new highs or close to, very close to new highs. Yeah, barely on the spider for the morning. Looking at the other charts pretty quick. We're on the DIA, the strongest relatively speaking. Qs need to get above their high the day, which they have not. They're lagging behind a little, and the Russell's lagging behind a lot, but it's still coming up. That's been great. You guys have a great trading day. Mañana.